Hi. So tonight I am going to record assignment number 5, which is preparing a 12-month income and expense projection report. All right. So this is your cash flow. If you go to module, let's share my screen. If you go ahead and go to module 3 in your manual or in Canvas, and you go down to assignment number 5, prepare a 12-month income and expense projection. You click on that, and then you will have the instructions. So this is what income you can realistically expect for the first month after licensing, the second month, third month, and beyond. All right. So what we are going to do is we're going to use this template to figure out what a projected cash flow is for this month. Okay. So in order to do this, let's go ahead and download the first couple of documents. The first is your cash flow statement, which is blank. This is the template. So you click the down arrow, and then it will come up with the box that will allow you to see where you are going to save your assignment. In my case, I am going to save this assignment in my adult family home assignments down in assignment 5. And so this will save the blank template. All right. And then if you need a sample for your cash flow projection, I also leave a sample of what we go over in class. And then we're also going to need, because we are going to have a combination of Medicaid residents and private pay residents. So we're going to download the latest Medicaid rates. So we go to the link here that I provide. This will take you to the Office of Rates and Management for DSHS, and it will allow you to download the latest rates based upon where we are. So if you are working with developmental disabilities residents, go ahead and download the DD rates, and you want to download the Excel spreadsheet rather than the PDF. And then down here, if you are specializing in any other type of clients, that would be the home and community service rates. And again, use the Excel spreadsheet, which will allow you to figure out exactly how much your residents will reimburse you for the services that you provide. So it says here all HCS rates. We download that into our hard drive. And then we have the ability to go ahead and open up each Excel document. And so I'm going to go ahead and open both at the same time. So I'm going to open the HCS rates and the spreadsheet itself. So let me coordinate these. All right. So the first one, let me go ahead and share the cash flow document so that you can see exactly what it looks like. So as we have this open, you can see that there are some up at the top, the startup, the month 1 all the way through month 12, and then the total. So we have it, each column is set up for each of the months separating. And then on the left-hand side in each row, we have the monies or the expenses that we're going to use. When you first open your business, you are not going to have any beginning cash, nor will you have any income received. So this is basically from the time that you go and you create your limited liability company or open a bank account, and immediately you have a zero balance when you open it. So you have to deposit financial money into it. So let's say we are going to start our adult family home, and we're kind of thinking that we're going to be able to put in $50,000. So under the startup phase, we go to line 3, which says other cash in, whether it's a loan to the business from an outside institution or an investor, or if it's money that you put in, that's called an owner's investment. So this is where we are going to put our initial financial contribution to the business. So I'm going to say I'm going to put in $50,000 to start. So the next line is total cash in. And this total cash in is going to be carried throughout the entire year. So what this is we're adding the income received because we are just starting the business, so there's zero income. We're then adding the other cash in, which is our owner's investment. So 0 plus 50,000 is 50,000. And then line 5 says total cash available for the month. So we go back to beginning cash because this is the first setup for our business. We have zero money as beginning cash. And then we add line 4, which is the total cash in for the month, which is that $50,000. So 0 for beginning cash in plus 50,000 means that we're starting our startup phase with $50,000. Does that make sense? Okay. So now we get into our expenses. This whole section here are the expenses that we classify as startup expenses. Those monies need to be spent in order to get your adult family home ready to open. So when you first look at training, this would be any money that you need for yourself or your business partner that you need to spend in order to get yourself trained for licensing. So, as we went through in previous modules and will continue to go through the rest of the course, the amount of training that we need at least the adult family home admin class, which is this class itself. And that in the state of Washington currently is about $700. Then if you are already trained as a healthcare worker, whether it's a home care aide, a CNA, a LPN, an RN, or physician, or anything like that, then you do not need to have any of that additional training. But if you do not have any basic medical training at all, let's just use home care aide as an example. You would go and take the 70-hour basic training or the core training, and some of the classes that you would sign up for would also include 50 or the other 5 hours for safety and safety orientation and home orientation, which means it's a 75-hour class. So however you look at it, that's the class that you would need. That class starts at $600 for some, and it can go up to $1,200 or $1,300 depending upon where you get that training from. You will also need to take the written test and the practical test for the home care aide, which means that might be an additional couple $100. So whatever training you need, the other training that you need for your adult family home is any specialty training, as well as first aid and CPR. If you are going to specialize in DDA, that training is free, provided by the DDA administration. If you are going to specialize in mental health or dementia, you would also need to take those trainings, which can be an additional anywhere from $50 to a couple $100. So you want to add all of that training together and come up with a figure. I'm going to say that this person needs home care aide training. It needs first aid, CPR. They're going to need the food handlers. They're going to need the testing. They're going to need the adult family home admin. So I'm going to just add all of those up in my head, and I'm going to determine that we're going to need about $2,000 for all of the training. All right. The next startup cost that you're going to run across is the entity registration, which is for creating either a corporation or an LLC, and that adds additional protection to you and your business for asset protection, right? So you would go up and get entity registration, and that on the Secretary of State website is, I think, $220, $250. So I'm going to just put $250 down for entity registration. Now we get into line 8, which is a generalized statement for improvements. This is the physical structure of your home. Depending upon what type of repairs and maintenance, or if you need to buy a house, you would determine what that would be. If you need to add a new bedroom, replace doors, add a new shower, whatever that cost would be under improvements. So in my house, let's say I have the house. I'm going to need to put a small ramp because the front door has a single step about 4 inches, so that I need to put a uh, ramp in so that a resident in a wheelchair can get into my house. So I'm going to determine what that ramp might cost. I'm also going to need to ensure that I have fire alarms that are interconnected throughout the house. I need to make sure that I have the grab bars in each of the bathrooms. There's going to be, let's say I need to do a few of those types of things. So let's say that I'm going to set aside about $10,000 for improvements, just painting or carpet, whatever. Now we get into equipment, and that would be furniture, fixtures, and equipment. Those would be things like refrigerator or laundry or any appliances that you need. All homes need to have furniture in the living room and in the dining room, enough so that each of your residents will be able to sit at the same time and either watch TV or eat, which means that in your living room you need to have enough sitting space for at least 6 people to sit at the same time, and the same with the dining room. So let's say you need to buy an extra freezer, you need to replace the washer and dryer because you know that you're going to be doing a lot of washer and dryer and laundry. So you're going to buy a commercial version of that. You're going to need to buy other equipment such as the small appliances in order to cook and things like that. So let's say as far as furniture, fixture, and equipment, I'm going to go ahead and spend an additional $6,000. All right. Now we get into food costs. We're still in the startup phase. So the food costs in this amount would be where you set your emergency food supply. As an adult family home, everybody needs to have 3 months or 3 days of emergency food and water. And then you're going to need things like just the basic canned goods and that kind of stuff, and in order to prepare your home for having residents. So maybe you want to just stock up on basic items, stock up on spices and things like that. And so that food cost, let's say for 3 people or 6 people for 3 days, plus your caregivers and your family if you live in the home, let's say we're going to spend $600 on your food costs. Now we get to advertising. This should really be advertising and marketing. And in the startup phase, while you're not ready to have people move into your home, you want to prepare so that you can. So under this advertising/marketing cost, this is where you're really going to want to have your brochures made. You're going to have business cards. You're going to have a logo created. You're going to have your business name and domain set up. You're going to have maybe some flyers put together, sign for the outside, things like that, that you want to spend prior to your home being opened so that people will know that you're in business. So let's go ahead and set aside $1,000, and that's with hiring somebody to do your graphics and things like that. Now we get into liability insurance. As you know, it's required by law that each adult family home has business liability insurance and professional liability insurance. And so when you are shopping for business and professional liability insurance prior to opening your home, you need to ensure that the minute you are licensed and bring in a resident, or within 10 days of licensing, even if you haven't brought in a resident, you have to have license or insurance ready to go. Currently, business insurance for an adult family home is going to be anywhere from $3,500 to about $4,500, depending on your experience and knowledge. So you're going to have the opportunity to go out and find those. But let's say we're just going to have set aside $3,600. Okay. So we're going to put $3,600 for liability insurance for the first year. Then we get into professional services. Professional services are things like uh, accounting, attorney fees, tax preparing, the ability to get everything set up for your employees should you have employees. So in this case, we're going to have our contracts reviewed by an attorney, right? Let's say you have all of your contracts ready, your uh, notice of rights and services, which is your admission document. You have that written and you just want to have it reviewed by an attorney. So you do that. And then you talk to a bookkeeper and get them to set up your accounting for you to do most of the accounting. And then that way they can do the quarterly filings and maybe your employees. So in this case, I'm going to set aside, let's say I'm going to have 1 hour of an attorney and then 2 or 3 hours of a bookkeeper. So let's say $200 for an attorney so that they can review your document, and then 3 hours of a bookkeeper at $100 an hour. So we're going to set aside $500 for professional services. Now we get into office supplies. So office supplies are going to be the things that you need in order to store your documents, in order to store your policies and procedures, your resident stuff, all of that. You do need to have privacy for that. So it either needs to be kept in a filing cabinet or a bookshelf that is locked. So let's say you need a filing cabinet, and then you need the printer and all of the paper supplies and ink, and you need the files and you need the hanging files and things like that in order to get started. So let's say you're going to spend another $500 for the basic information for office supplies, right? So that does not include a computer or the printer, fax, copy machine itself. That would be put under equipment up under line 9. So now we get to line 15, which is websites. So a website, while it is considered an advertising cost, it is nowadays almost a necessity that you have a website so that you present a professional image when somebody goes to find your home. So typically a website, you can either do it yourself, you can use the chat GTP AI to create one for you if you have any knowledge. You can have somebody hired to do it, or you can go and use a professional website designer. The one thing I will caution against, if you go and have a website created for you, um, a reasonable amount for a website would be anywhere from $800 to $1,200. Anything more than $1,200 for an adult family home would be excessive. So I would recommend having, let's say we set aside $1,000 for the website to be designed and updated and created, and just realize that there is a typical fee that is done monthly. That's for web hosting and maintenance and things like that. And so when you do that, you need to understand that there will be a monthly fee. Typically, it's anywhere from $25 to $75 a month is fairly reasonable. Now we get down to repair and maintenance. Because we are in the startup phase and all of the repairs and maintenance should have been covered up here under the improvement section, this would be a lower amount. What I recommend is having a miscellaneous savings account, right? And so when I think about a savings account, I think that a business should have a checking account and then 3 separate savings account. Savings account number 1 would be used for the repairs and maintenance or other or miscellaneous type expenses. Uh, Savings account number 2 would be for things that are non-monthly expenses, such as every year you have to renew your business license, you have to pay your bed fee slash AFH license renewal fee, your other things that you have to pay on an annual basis are things like in liability insurance. And so in that case, I would consider that a monthly fee. And so I would take money from my budget monthly and put it into savings account number 2. And then the third savings account would be for taxes, employee withholding, any employee contributions, any of that type of stuff, so that that would be designated for paying your quarterly expenses, paying your taxes, or setting aside money for taxes towards the end of the year. So that would be savings account number 3. So in this instance, this is a repair and maintenance. So this would be one of those miscellaneous accounts which we would deposit in savings account number 1. So let's say we go ahead and put $500 just to get that started, so that we would have an emergency fund set aside in savings account number 1. Now we get to supplies. These supplies are the things that you are going to be using on a regular basis in your home that are consumables. This would be your paper goods like paper towels, toilet paper, napkins, cleaning supplies, anything along those lines. So those types of supplies, anything that you have to do on a regular basis. Okay. So those supplies, to start up, you're probably going to need to have new buckets, new vacuum cleaners, things like that. I would consider that as supplies. So let's say we go ahead and set aside $250 to get the house set up with the basics. All right. Now we get into travel. This should really be called travel slash um, gas or expenses for cars. All right. So in this travel, I'm going to go ahead and figure that our startup phase is going to take us 3 months to get everything all fixed. And so we need to have gas money for 3 months. And we need to, if we're going to be going and fixing the house and all the different trips and everything, let's say we have $150 set aside for gas per month over the course of 3 months. So that means that our gas and travel would be $450. The next one is subscriptions. This would be subscriptions to magazines, or in this, I would also include subscriptions to like screen or online movies like Netflix or Prime or any of those online uh, video sharing type situations. So here you can be frugal or you can be excessive. I'm going to go ahead and put $20 for subscriptions to get set up for get some magazines in here for our residents, and then to get maybe Netflix or Hulu or something like that. Now we get to line 20, which means business phone. The business phone is important in the fact that all adult family homes need to have a phone number that we can publish on our marketing material, publish to the state, as well as allow our residents to use in a private setting. All right. So that can be either a landline. You can just have a regular phone line put in. You can use a voice over internet service like Vonage or Xfinity, and those types of things have landlines that you can use. Or you can get a inexpensive cell phone program. You are not able to use your personal cell phone for your adult family home. You need to have a separate phone with a separate line designated for your adult family home. So here we're going to go ahead and pick up a fairly cheap, inexpensive smartphone, not a name brand, latest version or anything like that, and then have a monthly, we're going to go with one of the cheapest plans that you can find, whether it's Patriot Mobile or Cricket or any of those. So in this case, I'm going to say I'm going to use $300 to buy an inexpensive cell phone for the adult family home. Now we get down to line 21, which is licenses for your adult family home and business license. So, as you know, the license for the adult family home is costing $2,750. And then you are also going to need your business license. That would be the master business license through the state, as well as the local business license for the city or county that you're a part of. And you can sign up for both of or the business licenses when you obtain your entity registration or your LLC. So the business license is typically about $85 to $100 for the master business license, and the same again for the local city business license. So at $2,750 for the license for the adult family home, add another $250 for an even $3,000 for our licensing, and that will ensure that we're good to go as far as license go. The next is a loan payment. So if you had to borrow a loan in order to get your business started, let's say this $50,000 wasn't the amount that you needed or that you had available. Let's say you had $20,000 for you to start your business and you ended up borrowing $30,000. So that $30,000 would be a loan. So the loan payment, maybe you go out and you get your business loan and you have to pay 2 months of the business loan while you are waiting to get your license started. So in this case, we had a $30,000 business loan and we wanted to figure out how much it would be. Let's say it was a 5-year loan. So just standard, what I'm going to do is take $30,000 and divide it by the number of months that we had in 5 years, which is 60 months. And then we're going to be paying interest on top of that. So $30,000, 5 years. Let's say it's going to be, our payments are going to be $600 for the loan payments, right? And so we have 2 months of loan payment at $600 a month. So we are going to put $1,200 in loan payments under the startup phase. Now we get to the association fee. This fee would be your association fee to the Adult Family Home Council. The Adult Family Home Council charges $50 a month, and it's well worth becoming a member, especially before you open your adult family home, because there's going to be a lot of questions that you're going to need to ask. There's a lot of forms and systems that they have that you have available to download for your business that is in the forms section on the Adult Family Home Council website. And it also allows you to list your home and the availability of empty beds in your home on their marketing. So it's also could be considered part of the marketing. So we're going to join the Adult Family Home Council so that they can review our application about 30 days prior to our submitting the application. So we're only going to have 1 month of the association fee. All right. Now we get down in the startup phase to staff wages. Are we going to need to start hiring staff for our business before we have any residents? No. The next is staff overhead. This is all of the tax, the L&I, the unemployment, all of the different fees that we have to pay to our staff. So that would be any time you pay staff wages, you're going to have to deduct about 30%, not deduct, but you're going to have to set aside about 30% of whatever you pay in staff wages for the staff overhead. So even though we're in startup, we're not going to set any of that money aside because we haven't got any residents that we need. Next, we get into utility. So whatever the utilities are for your home over the course of a month is what you would be setting aside here. So let's say the utilities include heat, electricity, gas, water, trash, the cable TV. Okay, so that would all be considered utilities. And so I don't know what you would be setting aside, but I'm going to figure that we're going to be paying about $300 a month for all of our utilities. And so we're going to include 3 months of utilities here. So that's going to be $900 for utilities in the startup phase. Now we get to line 27, which is placement fees. This placement fee is for if you use an employment agency, or not an employment agency, but a agency to have a new resident placed in your adult family home. Again, that is anywhere from 100 to 125% of whatever the income you receive from your residents. So in this case, we are going to take the money that most people would pay as a placement fee, and we're going to use that for our advertising. So I'm not going to set aside any money for placement fees. Next is business taxes or estimating. This is the amount of money that you're going to have to pay at the end of the year if you show a profit. All right, because you're going to take all of your income, you're going to deduct all of your expenses, and that will be the total amount of income that you have, and then you will be paying income tax on that amount. So in this, because it's the first year we're starting, I'm not going to put any in the business taxes in startup. And I figure that I'm not going to put any money into that account savings number 3 for setting aside money for taxes until later in the year when I know if I'm going to have a profit to show and pay that fee. So I'm going to leave that blank. Next is the mortgage that you pay for your adult family home. However much you pay for your adult family home, depending on your area, the payments might be anywhere from $3,000, $3,500, even up to $8,000 or $9,000 or $10,000, depending upon how big your house is and what the mortgage payments are. So I'm going to use $4,000 as mortgage payment, just general. And the fact that we're going to have to pay that mortgage even during the startup phase. So we're going to set aside $4,000 a month times 3, which brings that up to $12,000 during startup that we're going to have to cover our mortgage, right? So next we get down to line 31, which is another miscellaneous or other account. And again, this amount of money will be set aside into savings account number 1 to pay any unexpected expenses as they come up. We set aside $500 earlier at line 16 for repair and maintenance. So let's go ahead and set aside $250 for miscellaneous to put into that amount. So that's a good startup phase. Okay. So we go back up to the beginning and we look. So we have in startup, we started our business with $30,000 of owner investment. $30,000 of that was money that we borrowed. Okay. So then we get in and we have our expenses. All of our expenses total is going to be $44,370. So we take our total expenses for the startup phase, subtract them from the total cash available in line 5 for the startup phase, which leaves us $5,630 that we have for cash available at the end of the startup phase. During the startup phase and the first couple of months, we are not going to take any owner's draw. So on the template where you see these blue boxes, that means you do not put anything in those blue boxes, all right? So we have $5,630 in cash available at the end of the startup phase. We do not take an owner's draw, leaving us an ending cash balance of $5,630. The ending cash at the end of the startup phase is going to be our beginning cash at the top of month 1. Because look at it this way. Let's say, okay, so tomorrow is the last day of the month, or today's the last day of the month. Whatever I have in my checking account at the end of, at 11:59 p.m. on the last day of the month is going to be there at the beginning of the next month, which is month 1. So our ending cash and our beginning cash, because it's only 1 minute apart and there's no expenses in there, are always going to be the same. So our monthly cash at the beginning or our beginning cash at the beginning of month 1 is going to be the ending cash for the startup phase. So every month, whatever you have as ending cash for the previous month is going to be the beginning cash for the following month. Okay, does that make sense? Now we're going to get into the income received and the total cash in. All right, let's start with our income. So we will open up a new document here.